All right, looks like we are officially live on both Roxham TV and my YouTube channel, so Jam Crypto. Welcome. So today is Friday. I'm extremely excited. I got a little ginger beer to celebrate weekend. I got great plans for tomorrow. I'm actually hosting a crypto yacht party tomorrow, so where I invited a bunch of close friends in the crypto community. We're gonna do water sports. Water sports. We'll be drinking and doing karaoke. So I'm very excited. So happy weekend. Hope you guys are doing having fun. Bitcoin is obviously on a rally. So myself, I'm extremely excited when I look at the chart this morning because, well, Bitcoin broke its key resistance. Well, if you don't know what I'm talking about, I'll just quickly show you my screen so you know why I'm so hype at the moment. So Bitcoin, what have we got here? If you don't know, if this is your first time watching my show, I usually start off with the 1 hour chart for the BTC price. All right, so I drew this rectangle a few days ago. The reason why I drew this is, okay, we have so much price action around 107, so 107K to 113. Actually, we got more price action touching this resistance. So we have okay, we keep touching it at 113, and looks like we on the hourly chart at the very least we break resistance and manage to hold above resistance, which is showing really bullish sign. I'm really happy where Bitcoin is going, and as I mentioned, how you can predict where Bitcoin is going is just a rough reference for you guys, right? So I drew this consolidation period, which Bitcoin basically has been trading within this period for 21 days. Oh my God, so that's pretty long. So one way we could see where things is going is that, okay, we take the width of the rectangle, so we go to the breakout point. It's same whether it's breaking on the upside towards the upside or if we're going down, so crashing to the south. rather. So if we crash, like if we ever lose support line of 107, then the next support we're going to be 101. But luckily, Bitcoin is taking the second scenario. So we are going to higher places. We broke out at the 113 right here. And if you zoom closer, what I'm surprised is that I can actually see Bitcoin retesting this level. So we touch it like, okay, let me zoom closer. We touch it here. So a few candles, so 1, 2, 3, 3 hourly candles. We test this level of support. And then we test it again on here. So at 9 o'clock. So what happened between 8 o'clock and 9 o'clock? What happened, right? Why Bitcoin is retesting and also why there's like so much volatility. You see, these two bars in particular, you see huge wick, the one at 8 o'clock. If you zoom closer, like it's actually, okay, this bar is like less than 1%, but traders love this volatility. What happened during that hour, right? If you catch yesterday live stream, we had the CPI report came out and it was, I wouldn't say bullish, but it was exactly as we predicted. So that's why the market liked it. The markets always like to, the markets are forward looking and they like to predict stuff. If the BTC or like the outcome is exactly as we predicted, usually the market will be neutral or happy about that. So in this case, Bitcoin is really happy about the CPI report, which is sitting at 2.9% inflation rate. We're going to get into the details in a bit, but because this is basically what happened between these two candles, these two hourly candles. So the fact that we retested 113, and then it looks like we're going to higher places. The next major resistance is 119. This is how we usually do it. Like we take this width and then we go to the breakout point, so we get 119. All right, so here we are on the hourly. Let's also hop onto the daily chart. Let's see if we get more indicator on whatnot. So on the daily chart, we actually close above the resistance, which is great. Right now it's correcting a little, but I'm not too concerned. What I want to see is actually, okay, on the daily as well, we touch this, like we retest and then we go to higher places and go to 119, just like what we saw on the hourly chart. And not only this, another quite strong bullish sign that I'm seeing is that from the 50-day moving average. So, all right, sorry. Let us remove this rectangle so you guys can see closely what's going on. All right, so just focus on this blue line. This is the 50-day moving average for BTC. And if we zoom closer, we close above that 50-day moving average, which is quite good, right? This is showing another indicator of showing that BTC is in control, which is something we want to see. All right, so not only this, let's also hop onto the weekly. All right, so weekly, let's again need to draw that rectangle because it can provide some sort of perspective of where things are going. So remember, we drew that rectangle between 107 to 113. This candle, however, we haven't closed yet. Usually it will close on Sunday and then we have a new weekly candle on Monday. So it still takes 2 or 3 days for this weekly candle to close. Hopefully we can close above this level, above this support and resistance line. And if we manage to do it, like same things goes for the weekly chart. I hope to see that, okay, we close above and then we retest and then we go back up. And when we go back up, as I mentioned, 119 is going to be the major resistance. Another reason why 119 is the major resistance is that Bitcoin likes to go back to the prior resistance or support level. And if we look at that, there you go, like 119 or 120, there are so much price history around this level, and seems like Bitcoin never managed to break this resistance in terms of the weekly chart to close above that. So hopefully by then we are seeing more strength, but because of the CPI, we are loving what we see. All right, so that's for the TA. Let's also hop on to the CPI. What's going on? Like, why is everyone so like on X? Everyone is talking about CPI because it's just like what we expected. If you didn't know what's going on, I'll give you like a brief summary. So in other words, like long story short, like the CPI is sitting at 2.9% year over year in August. It's actually up a little bit compared to 2.7%, but the market is rallying. The reason why we rally because is basically as what we expected. We expected 2.9 and we got 2.9. So people like that. Yeah, I mean, I'm not complaining. I like rally. So it is what it is. However, let us look at the, like dive deeper into the CPI, and also because like the CPI and the PPI kind of come out quite close to each other. The PPI, the recent data that we got in August is actually a negative number, so minus 0.1. Because of this, people were really happy. We kind of focus more on PPI instead of CPI because PPI is like a leading indicator. And then the PPI was so good and gave the market like a really good surprise. So there are, what I'm seeing here is that there's some contradicting data. Like first of all, CPI is rising. However, I do expect that it's going to come down a little bit next month or 2 months because PPI is an indicator, like a leading indicator. So CPI would follow afterward. PPI, we have a negative number, a good surprise. And then the labor market, we talked about that in our previous live stream because there are like more than 1 million jobs revised down. The job market is showing weakness. And remember, the Fed always has the dual mandate to think of it like a balance. They need to control that pain point. So everything is balanced. On one hand, we have the labor market. On the other hand, we have inflation. Inflation looks like it's mostly driven by tariffs. Yeah, it's a little bit controversial about that, but that's like another like 2 hours video where the tariffs would drive up inflation. But like, okay, let's dive deeper into the CPI report. If you don't know what that is, basically it tracks price. Oh, okay, there you go. That's the CPI, sorry. So basically it tracks prices consumers pay for everyday goods and services. So think of your grocery bill, rent, gas. Why it matters? Because high CPI means the Fed may keep rates high. On the other hand, low CPI means that there are more room for rate cuts. So we are seeing that, okay, headline CPI is 2.9%. And the reason why we are seeing a slightly tick up in inflation is actually, okay, if you zoom closer to the actual number, you can see that food is rising. It rose like 0.5% month over month. Same goes with energy. It rose like 0.7% month over month. And shelter, it rose a little bit as well. So those are the key drivers why we're seeing a uptick in the CPI number. The key takeaway is that inflation is like edged higher, and it's not the target rate for the Fed because they target 2%. Right now we close to 3%. So yeah, all eyes on the Fed because the Fed meeting is going to be like between 17th to 18th of September, what the Fed going to do. So that's for CPI. In terms of the PPI, we look at this briefly yesterday live stream. So we dipped 0.1% month over month, which is really good. However, year over year is up 2.6%, still down from the previous month though. The key reasons why PPI did what it did is that, okay, goods barely up, it's like 0.1%. Service is down 0.2%. So that's why PPI shows like the number is easing. So potentially a cooling factor for the future CPI to come. All right, so the reason why we focus more on PPI is that it tracks directly what businesses pay for inputs like steel, wheat, or shipping before goods hit shelves. And since it leads, like if producer costs drop, consumer price might follow in a few months to come. So that's why market, like even though we have an uptick in the CPI report because we focus more on the PPI, the market still love what we saw. All right, so that's for the inflation number. No upside shock like the CPI match forecast. The job market is extremely weak. We know that. Like there are 4 consecutive months of we have like less than 100,000 jobs being added for 4 consecutive months. Those are like early signs of recession. Yeah, I mean, I know, Jamie, like recession is on the table again, which is extremely annoying. But yeah, the Fed, it has no choice but to step in and cut rates. If you go to, okay, let's pull up Fed Watch. If you go to the prediction market, people are predicting that, okay, there's at least like guarantee we're going to get a rate cut. So at least 25 basis point cut. 92% of people think that we'll get 25 basis point cut. 7.5% of people think that we'll get 50 basis point cut. Well, I think, like if you ask me, I personally more leaning towards the 50 basis point cut. Okay, I'm not being biased because I'm holding crypto, but I think the Fed is necessary and they kind of have to cut rate fast. There are early signs of recession and cutting rates can prevent that. We don't have to actually get recession. Like remember that. It's just like if we cut rates soon enough and percentage-wise is big enough, we can actually prevent that. The job market is showing extreme weakness. Tariffs is placing some pressure onto inflation, although I think it's temporary. So I think like even though like if the Fed comes out on 18th of September and do a 50 basis point cut, I think is justified. Yeah, I actually support the idea. The reason why I will say this is that, okay, I focus a lot on the treasury yields compared to the Fed fund rates. So the Fed fund rate right now is sitting at 4.3%. And then I like this graph, okay, maybe it's a little bit complicated, but I just want you guys to focus these 2 lines. So bear with me, I'm going to explain how you read this, okay? So the Fed fund rate's 4.3%, while the 2-year treasury yield is sitting at 3.5%. In other words, it's a 80 basis point difference, so a 0.8% difference. This is an issue because it's inverted, and the Fed kind of have to fix that. Like even though if we do get a 50 basis point cut, that would well, how much is that? Okay, that would still have like 0.3% to catch up towards the 2-year Treasury yield. So even a 50 basis point cut, that's why it's justified. Like I think the Fed has definitely more room for a rate cut. Yeah, so like the Fed needs to cut enough so short rates fall below long-term yields. I would say 100 basis point this year in total. I'm not saying that, okay, the Fed should just cut 1% this month. That's not what I'm saying. I'm saying that maybe we can get like a 0.5% rate cut and then maybe 2 more rate cuts in the coming months. That's what I'm saying, because it's necessary. Otherwise, it will stay inverted. And that's another indicator for recession. And the Fed doesn't want to see recession. And not only this, if you pull out the 10-year Treasury yield, like 10 years also trading below the Fed fund rates, which is not ideal. So I will say the Fed, like, okay, 50 basis point this year alone is not enough. I think maybe 1% is, you can justify with 1%. All right, so that's for the CPI inflation number, and also with the TA. Let's move on to the news section. So well, let me zoom closer so that you guys don't have to squint. And let me do a side-by-side because you probably not gonna read the news too much. I'm just gonna tell you the summary, what's going on. So basically, SEC delays decisions on staking for Ethereum ETFs along with XRP and SOL funds. All right, so if you've been watching Jam Crypto, you know that I never talk about XRP because I really don't see the reason why I should talk about a coin like that. This is like ultimately the most useless coin I've ever seen in my entire life. So I'm going to ignore XRP, just going to focus on the Fed decision for Ethereum and Solana. All right, so as of today, the SEC has once again extended deadlines for several high-profile crypto ETF proposals, affecting like the Ethereum staking add-ons and Solana spot ETFs. Like, remember, those aren't rejections. They are just like procedure, like a standard under the US security law. Why it matters? So the ETH staking ETFs could transform Ethereum into a yield-bearing institutional product. And as we know, institutions love yield-bearing stuff because, okay, it's generating reward on a passive basis. Why wouldn't institutions want to get some of that action, right? And so does for SOL Spot ETF. It would open the floodgates of institutional money into one of the fastest growing chains. But remember, like the SEC is juggling so many ETF applications, like more than 90 crypto-related ETF applications. We have a very friendly chair, Paul Atkins, who was appointed by the Trump administration. However, he still needs to balance the very pro-crypto approach and also the risk. So yeah, this is just how the government works, like nothing to be concerned about. As for the Ethereum ETFs, let's look into the details, like the timeline, the delay, and also the latest developments. All right, so there are a few companies, and then they all get delayed by the SEC. First, we have BlackRock, and then we have Fidelity. Not sure if you heard of that name before. And then Franklin Templeton and 21 Shares. So those are massive institutions getting in, but the response that they got from the SEC is that they're going to extend the deadline to 30th of October, except for Franklin Templeton. I think it's been delayed to November for Franklin Templeton. But yeah, they're delaying. But I do think we're gonna get the approval at some point, of course, because like the ETH spot ETFs, like which was being approved in May this year, already pulling in hundreds of millions of dollars inflow. So institutions really like that, and as we know, like BlackRock has significant impact on the US government. So I'm sure if BlackRock wants in, they're gonna get it. Yeah, so that's for ETH staking ETF amendments. And then as for SOL, like different institutions apply for that. Like, okay, Franklin Templeton as well. They have been extended to November this year. And then, of course, there are other Solana ETF filings, including 21 Shares, Fennec, Bitwise. They've all been delayed. And they need to, like, the amendments to be made. Like, for example, for the SOL ETF, the regulators are saying that, okay, it's better to use cash redemption instead of in-kind crypto transfer, like stuff like this. It's just like a little bit of back and forth, which is completely normal. And it makes sense for the SEC to still have a little bit of concern, just to be like cautious when it comes to crypto asset, right? So as for the ETH staking, like the SEC still use the Howey test, which I don't really know why. It's completely archaic. Staking could look like the investing money in a common enterprise with expectation of profits from others' efforts. So that's why staking-wise, the staking aspect comes in late compared to the spot ETF. The SEC is also concerned about other risks related to Ethereum. For example, slashing, like validators can lose funds if offline. And what about custody? Like who controls the stake ETH? Is it ETF sponsor or third-party validator? And also there's also this element of centralization that the Fed is, the SEC is concerned about. If ETFs stake through only a few validators, it kind of concentrates the network power. So the SEC is saying that, okay, maybe it's best to separate review. Spot ETFs already hold ETH, but staking kind of add like a new risk or reward layer. But ultimately, I think the SEC would allow that. They just want some clarity before completely disclosing that. As for Solana, I think we will get the approval, but for Solana, it takes definitely longer time compared to ETH, right? Because first of all, like the SEC has argued in lawsuits that Solana are securities, but we have the new chair, like Paul Atkins, say that most of the cryptos are not securities. So that's why for Solana getting a delay, I wasn't surprised at all. And Solana compared to Ethereum, there's like thinner liquidity. So there's like liquidity concern, even though Solana market is deepening. But like if you compare to BTC and ETH, Solana is still tiny, right? And then the network risk, because Solana has a history of outages, that is like a major red flag if the institutions trying to get in and turn that into ETF. Even though upgrades like Fire Dancer is like a major improvement, and then it kind of like improved the reliability a lot, this thing still take time because it's the government we are talking about. So the SEC majority, like they delay for 45 days, and then they slowly extended the time. Wait, how can I make it? Whatever. Okay. Extend that to 90 days, and slightly there's a maximum of 240 days that they can extend such thing. So yeah, I think for Solana we'll get a spot ETF perhaps in 2026. And then, yeah, that's why I'm quite bullish on Solana. Like compared to Ethereum, I'm actually more bullish on Solana. ETH, I'm bullish as well. It has like a sticking reward between 3 to 5%. And the spot ETF for ETH, it already proved that it is very successful and institutions can make a lot of money. So of course, the US government going to support that, right? And as for ETH, my prediction, okay, let's hop onto the chart again. So ETH, BTC. All right. I drew this, let me remove this so it's not too messy. I drew this like ratio 0.04 ETH versus BTC like weeks ago. The reason why this is a critical level is because, okay, most often than not, we trade above 0.04 for Ethereum. But okay, it looks like we're slowly catching up and closing the gap. But like 0.04 is a level I think we could easily get past. So as for the prediction for ETH, like if you use just like 0.04, which is almost the current level, we are sitting at 0.039. And let's assume it's 0.04 because Ethereum going to get that for sure. And then let's times that for BTC price. I'm being conservative here. Like let's say in 2025 year end, BTC reached 150,000. So that would put Ethereum at 6,000. Yeah, there's still a lot of room for ETH to go up. Let's put up the chart. So we are sitting at 4,500, and if ETH reach 6,000, it's going to be a 35% increase by year end. I mean, that's pretty nice, right? So that's my prediction for Ethereum. As for Solana, the upside is even bigger because the ecosystem is booming. Like DeFi on Solana, the TVL, it exceeded $10 billion. So that's really something. And we are also seeing a wave of treasury companies. We know that treasury companies' narrative is really strong in this cycle. They've been doing that for BTC and ETH, and slowly we're seeing a wave like coming into Solana and allocating billions to Solana. And then I touch upon this a little bit as well, the Fire Dancer, the network upgrade. So that's going to solve the outages a lot with Fire Dancer. So yeah, I like Ethereum. So I like Solana and also Ethereum. But personally, I hold more Solana. Of course, not like financial advice. I'm just sharing what I'm currently doing. All right, so that's for ETF. Sorry about that. Okay, so that's for ETF. Let's move on to the next part of the news that I've got prepared in this section. All right, so stablecoin and crypto activities restricted for China state-linked firms in Hong Kong. What's going on here? Well, if you're watching my show on Roxham, then I'm not sure if you know, I'm actually from Hong Kong. So I could offer some perspective, what's going on here, what's the local scene for the crypto adoption. So basically, China just sent a strong signal on Hong Kong stablecoin market, issuing restrictions that discourage mainland firms from joining the party. What does this mean for Hong Kong new stablecoin rules or like for users in Hong Kong? Because we use a lot of USDC and USDT. So let's break it down. So actually, this news came in late August. So what Beijing is saying is that, okay, state-linked firms or brokers or banks, they are not allowed to promote or pursue stablecoins business in Hong Kong. What it really means is that, okay, it's not a ban on stablecoins. Don't worry about that. It's not a ban on stablecoins in Hong Kong. Instead, it's like discouraging mainland participation. Why now? That's because Hong Kong has a really comprehensive stablecoin law that came to effect on 1st of August. So that's just like a month and a half ago. And Beijing worries about capital flight. Maybe like some of that money would fly to Hong Kong through stablecoin, and then Beijing is worried about the money laundering issue and some financial risk. Yeah, so in other words, it's not a ban for the stablecoins in Hong Kong. It's more like China drawing a line for the state-owned firms. So if you don't know about the Hong Kong Stablecoin Act, here's the detail. So starting on 1st of August, the law came into effect, and then there are some key requirements to be met. First is that it has to be full fiat reserves in cash and government securities, and then the users can redeem those stablecoin within one business day, and then there's like straight KYC and AML checks. That is like pretty standard, I would say. And if you guys didn't know, because there's so many OTC on the street of Hong Kong, like literally you can just like walk in with a pile of cash and then to purchase some USDT or BTC. This actually surprised a lot of people abroad, or Singaporean especially, because Singapore is a crypto hub, but they have really strict regulation when it comes to crypto, and it's almost like stifling crypto innovation. So when they come over to Hong Kong, they were really surprised. Okay, wow, there's so many OTC on street. So that's the crypto scene and stablecoin scene in Hong Kong. So right now the government is coming in to like telling all these OTC, okay, now is licensed, you have to comply with the KYC and also AML check, yada, yada, yada. Hong Kong business, they can issue stablecoins packed with any currency, maybe like USD, HKD, or other like G10 currencies. No issue, but they have to make sure it's like packed 1-to-1, and it can be redeemed to the actual currency. That's all the Hong Kong government is saying. So it's more comprehensive than the Genius Act in Hong Kong, Genius Act in the US. Right now in Hong Kong, most of us still use USDT. I think a combined like USDC and USDT, there's like dominated of 80% in Hong Kong local market. So even though after this law come into effect, people can still hold or trade and send USDC, USDT freely. That's what we have been doing P2P, especially on like some exchanges like Binance, and then we have like a dozen of licensed exchanges in Hong Kong as well. But those usually focus on like spot trading, and they have like a very limited of coins that we could trade. So a lot of people still use like global exchanges like Binance. And when it comes to like P2P market, USDT is still dominating. Not a lot of people use USDC in Hong Kong. That's interesting. So why China is being restrictive right now? Because, well, China is a massive market, so they can't afford to have something go wrong. They are using Hong Kong as more like a test net. Like if something works, then yeah, maybe China could adopt that. Because let's not forget, like China has a huge population, like 1.4 billion population. So they can't be too innovative. They want to be innovative, but since crypto is like a new product, they are skeptical. So Hong Kong becomes a really good test bed for China to see whether it works or not. In other words, I'm extremely bullish on Hong Kong, and I'm seeing like many talents flowing back from Singapore or like so-called other crypto hub flowing back to Hong Kong, because like Hong Kong has more friendly regulations compared to a lot of like so-called crypto hub around the world. All right, so that's what's going on in Asia. Let's move on to the next piece of news. All right, so we talked about that a little bit during our yesterday's live stream. It's about Gemini. Gemini IPO oversubscribed 20x and value up $3 billion. So this is really something. And I have to say, I wouldn't say I was surprised, because Circle or like, well, not so much Coinbase. So Circle kind of witnessed the same. But okay, Gemini just pulled off one of the hottest crypto IPOs in years, oversubscribed by more than 20 times, like shares price above range and a valuation of $3 billion. So is this a start of the Coinbase style success story, or could it crash like Circle? Like, let's break it down. If you don't know, if you're not from America, like Gemini is a platform that is widely used in the US, and it was launched back in 2014 by the Winklevoss twins, who's very famous with the Bitcoin bat and also some Facebook drama back in the days. The exchange is known for compliance and institutional focus and strong security. And what happened is that they went on IPO. The early pricing, they started with $17 to $19 a share, later raised to $24 to $26 a share, and finally they IPO at $28 a share. And it even, okay, the demand exceeded the supply by 20x. So that's really something. They sold 50 million shares, and then valuation 3.3 billion. And they do have strong institutional support as well. So Goldman Sachs and Citigroup as underwrites, and NASDAQ itself invested $50 million at the IPO price. So what it means is that, okay, oversubscribed IPO by 20x, that means like 20 people fighting for a single ticket to a concert. Think about that analogy. It might help. So yeah, that's really, really something. So why are investors so bullish? Like, why are they rushing in? First of all, the SEC, the chair, is extremely crypto friendly. He's constantly pushing Project Crypto. And then second of all, we do have anticipation that the Fed just gonna lower rates from here. Like, it's almost certain that we can only lower rates. Definitely not gonna get rate cuts. So things are moving to a better direction, because when we have rate cuts, that means more liquidity entering the market. So investors are seeing this as a good signal to enter the market. And yeah, this is like a great, I would say a great start for all these crypto exchanges. Gemini right now is adding a lot of legitimacy. So Gemini is proving that, okay, crypto companies can still raise billions of dollars on the public round and can really being taken seriously by Wall Street. And then what this also means is that the IPO can unlock like capital assets like never before. So it can be expanded into Europe or Asia, and yeah, maybe a little bit of R&D into tokenization. So this is like the bigger picture. Maybe the crypto IPO wave is also a narrative for this cycle. However, I do like to be more conservative here, because of what happened with Circle. Well, let's look at how Circle's doing. CLC, no, wait, what's the ticker? CLCL stocks. Okay, Circle right now trading at $133. However, this is so crazy because the IPO starts at $31 a share and then it peaks at almost $300, a 8x, so 850% uptick. And then it collapsed to right now $133. So a classic pump and dump. Like, I don't know, if you didn't tell me, I thought I was looking at some shitcoin. So why did Circle dump so much, right? First of all, there's some insider sales. ARK actually sold $146 million. And then also because like the valuation is so overvalued, it looks very frothy, so it makes sense to have this correction. And then Circle, another reason why I'm kind of bearish on Circle is that the revenue is tightly tied with the interest rates. Right now, we are at the high interest rate environment. So look at the Fed fund rates. Okay, we are still at a very high rate environment. So that's why Circle is making so much money, because they invested into treasury bills. So yeah, that's the majority of Circle's earning. Since we are heading to rate cuts from now on, so let's see how Circle does, right? So we also have like more competition from PayPal. PayPal is launching their own stablecoin. So we have Hyperliquid. Hyperliquid is a really prominent DEX that I really like. They have really strong product, and now they're getting into the stablecoin scene. So I'm quite bullish on that. And if like all these like institutions or big platforms doing their own stablecoin, where does that leave Circle, right? That's another reason to, another point to think about. But it doesn't mean that Gemini going to follow what Circle does, because at the end of the day, Circle is just a stable coin, while Gemini is an actual exchange, like a trading platform. That is just like something to take into account. Although I do want to draw comparison between Gemini and Coinbase, let's like see if there are any similarities or if there's like growth potential to actually get into this play. Gemini right now is sitting at 3.3 market cap, 3.3 billion market cap, while Coinbase is sitting over $50 billion market cap. So Gemini is a lot smaller. They have like 10 million users, while Coinbase is a 10x, like more than 100 million users on that platform. And there are limited coins that can be traded on Gemini as well. Only like 70 something cryptocurrencies can be traded, while Coinbase, there are more than 200 coins that can be traded. And then, however, there are like some benefits of using Gemini compared to Coinbase, like their lower fee on Gemini, while Coinbase is known for extremely high fee for the beginners. So yeah, if you guys in the US, like I don't use these exchanges because I'm in Hong Kong. I use some other exchanges, but like for American, like I don't see the point of using Coinbase. Although I like Coinbase, and it has been recently added to the S&P 500. So that's another reason I hold Coinbase. But like Gemini, I do see that, okay, it has a smaller market cap. So that's why a bigger upside, while Coinbase is more like a blue chip. So it depends what you want, right? If you want long-term stability and then sustainable growth, then Coinbase. And then Coinbase has been added into this S&P 500 as well. While Gemini, there are a lot more upside, especially in the bull run. So yeah, the choice is yours, and not financial advice. I'm just telling you all the data and what I've seen so far. All right, let's move on to the last piece of news, because I've been talking for a very long time. Okay, another partnership. We have Binance and Franklin Templeton. They're diving deeper into tokenized assets. And this is another reason why I'm very bullish on RWA and why I think the line between TradFi and crypto exchanges is going to get even more blurry. So they announced on 11th, so 11th of September, that these two firms, Binance and Franklin Templeton, they are developing tokenized securities and digital asset products. Like, this is really something because, well, RWA's actually surpassed $24 billion in the middle of 2025. So it has been up 380% compared to 2022. So I still see this, like, there's so much money from the RWA sector pouring in. So how does this partnership work, right? First of all, there's when it comes to RWA, of course, we have to talk about tokenized funds. So that's deeply tied to the U.S. Treasury, corporate bonds, and money market. And then another sector that is included in the RWA is like real estate and private equity fractions. And also, like, this would also enable auto dividends on chain. They have this prototype launching in Q4 this year, and the rollout I'm expecting like late 2025, maybe early 2026. Likely this thing gonna be built on BNB chain because it's Binance, right? It makes sense to be built on BNB chain. I assume on other EVM chain as well, like Ethereum and Polygon. And Chainlink is being used as oracles. That's another reason why I'm bullish on Chainlink, actually. All right, so why institutions are getting into RWA? We are seeing so many of them. Even BlackRock is there, like the Biddle Fund getting in. So what do institutions see in this RWA sector, right? First of all, we have clarity. Again, regulatory clarity from the SEC. We have Project Crypto. We have EU's MiCA, and it reduced uncertainty. So institutions feel safe to finally get into this massive pool. They saw like this massive money pool, but they can't go ahead to collect that money. Now they see this as an opportunity to finally collect that money. All right, and then RWA actually, it increased the efficiency a lot, like, because tokenization, it's settled. Like right now, if you want to purchase, I don't know, like bonds and stuff, it takes a long time and it's like a long process. It's not so easy. But with RWA, we are talking about settlement within seconds or minutes. So it actually reduced costs by 50 to 80%. So that's why institutions are getting in a really massive pace. And then there's huge liquidity being unlocked. We are guessing like $300 trillion for global real estate and other $100 trillion on the bond markets. So became fractional available, like people can buy just a fraction of that bond. So so much liquidity being unlocked, and once that bonds being unlocked, like we could use that into DeFi, right? So pulling a little bit of yield, the treasury is already offering 3 to 5% yield, but if you put it into DeFi, that's another world. Like that's another Legion rabbit hole we could get in, but maybe not in this video. All right. Yeah, however, there's like so much competition going on. BlackRock, JP Morgan, Citigroup, they're all getting into the RWA play. So let's see which one leads. Yeah, so because of this new, BNB pumped a lot. Like BNB pumped 5%. Let me go to CoinMarketCap. All right, so BNB, well, over $900. That's really something. Reaching new all-time high because of this news. A bunch of other RWA tokens, like I'm not sure if you guys know Ondo. Like Ondo is benefiting from this news as well. So as MiCA, MKL, if you guys are interested in that. Yeah, so I would say the line between TradFi and also these like crypto exchanges, the gap is getting blurry. I'm thinking in the next 5 years, like users not going to even notice whether they're using a crypto platform or a TradFi platform. Like the UI UX is going to be extremely smooth, which is a good thing. And yeah, that's pretty much all I want to cover in this live stream because I've been talking for a very long time. And I think there's another show lined up for the Roxham TV. So thank you so much for watching this live stream. So I'm doing show every, so Monday to Friday, between 5 p.m. to 6 p.m. Hong Kong time, which means 5 a.m. Eastern time for you guys. So make sure you hit subscribe, subscribe to both Roxham TV and also my YouTube channel, Gem Crypto. If you want more regular updates from me, do follow me on my own Twitter. Make sure it's Gem Crypto _IO, because otherwise you'll get my old hacked account. So just be very careful. You put the _IO. So make sure to follow me on Twitter and Instagram, and I'll see you guys in the next one.